obviously, when I've been working so many years in the insurance industry, hearing things like, "Oh, insurers, you're all thieves," and it's so annoying to hear that when you actually really believe in what you're doing, right?
No. I want to get paid. All of it. To hell with the insurance company. You can close down. First of all, welcome everyone to another episode of Taka Talks. Today we have with us two very special guests. We have Lara. Okay, this is where I get stuck. Vaja Badian,
It's fine.
who brings a wealth
Yes.
who brings a wealth of global experience from both corporate and startup environments, particularly within the insurtech and health tech sectors. Over time, she's become industry agnostic, supporting startups across industries as a consultant, advisor, and board member. She also co-founded Thought on Paper (TOP). She has helped transform ideas into realities, fostering entrepreneurship. This journey eventually led her to co-found UBQT. Is that the right way to say it? UBQT?
Yes.
UBQT, which is
Ubiquity.
a social
Ubiquity, yeah.
ubiquity. Oh, there you go. See, I knew there was something else missing. Which is a social networking
Yeah.
app designed to help people reconnect with their network no matter where they are in the world. Thank you very much and welcome, Lara. We also have with us a last minute special guest. His name is Ishaq Kotawala, who comes from an insurance family in Pakistan. So our favorite kind of people. After his actuarial degree from Cass Business School in London, he returned to Pakistan, spending 12 years with leading insurers, including serving as the chief actuary of Takaful, one of the rare actuaries who's also spent time in sales. This is really true. It's very rare. Successfully for a few years. So in 2016, he started Baikia, arguably Pakistan's largest startup, as a founding member. Congratulations, serving as CFO and CSO. At Series B, he exited Baikia to start his own insurtech startup called WAADA. So WAADA has raised $2 million and issued over 10 million micro policies. As a full stack insurtech focusing on life and health products in Pakistan, WAADA is expanding to Saudi Arabia with an MGA license application in progress. It aims to offer high-end life and savings products through its fully integrated POS platform. It's incubated by Flat Six Labs and MISC in KSA in 2023, and they are closing a pre-Series A round led by Qatar Insurance Company to support its expansion. So welcome very much, Brother Ishaq, and thank you to you both for joining us. Now, I'm gonna give you guys about a minute each to kind of give us a quick intro from your point of view. So let's start, ladies first, Lara.
We'll be right back after the break.
Ready to unlock your financial future? Join the Taka Token airdrop and get rewarded. Sign up on Galaxy, complete missions and earn points. Points convert to Taka tokens in 2025. Don't miss out. Join the airdrop today.
Ladies first, Lara.
So, okay, maybe I can add something a bit different than what you have already said. So, I'm born in Beirut. I'm originally Armenian. I grew up in Algeria, which Morad, I understood that you are from as well. And then I moved to Brussels. And when I was working with Generali, I was sent to US and Hong Kong and came back to Europe. So I spent almost over like 9 years, like almost 10 years with Generali Employee Benefits. Then I moved to London to join COFAS in trade credit insurance and political risks because I wanted to move from the life to the non-life, which, by the way, is very rare as well. In the insurance industry, people usually do either only life or only non-life. And I really wanted to gain experience from both sides. And then after that, I moved to the startup world with this health tech and then start my own company where I was bridging the gap between insurers and insurtech and health tech startups. Today, if I have to fast forward, the only insurtech thing I do is actually I'm a board member of WAADA because I'm a very proud board member
Oh,
and a very big believer of Ishaq. So yeah, that's the story.
amazing. Okay, so I didn't know you guys were related.
Yeah.
Related, yeah. We're friends and then co-workers. So yeah, and I don't have such an eclectic mix of background like Lara, but everything in my life has been happening through serendipity. Even Lara, I met a year back at Leap, and I came back to Pakistan. We had a meeting, and she just like our ideas matched. She introduced me to the MGA license, and we said, "Oh, I find Riyadh really exciting." And we started working towards a license in Riyadh and expansion in Riyadh. And ever since, we've been coming back and forth to Riyadh. Yeah, my background has been I've been a math geek, always a number guy. Data just really excites me. My only exposure to Saudi used to be Umrah, where I used to come with my family all my life. But recently, when I visited Riyadh, it was like an eye opener that okay, the Saudi is much more than just Umrah, which is also very exciting. But I found like a Dubai vibe recently, where talent from global talent is talking about latest technology. The quality of the conversation is like for example, at the garage that happens is like any other. Like it feels like you're in San Francisco. So it really excites us, and me and my coworkers like often visit Riyadh just for that exciting time, more than the business. So yeah, really looking forward to expansion to Saudi and then through Saudi to the rest of the Middle East, hopefully. So life has become exciting in the last 2 years and also very fast. So a lot of neglect of family time and personal time.
So thank you very much for this introduction, and I am remiss if I do not introduce my co-founder as well, who is Murad from Takadao. Murad, do you want to say a couple of words about yourself?
Yes, so first of all, thank you. Welcome to the show. And my name is Murad. I'm one of the co-founder of Takadao. So Takadao is a community-based insurance that help insure community member, people who are there to the insurance as a group. So we move into the insurance space 2 years ago, and happy to say that we will be launching an airdrop campaign in the next few weeks that will help our community to be part of not only what we're building, but have ownership of the product that we're launching. So happy to have you here today and sharing with you guys the podcast. And of course, I'm Algerian, born and raised in France. So of course, Algeria is there to me, and I really like the place as the people, even though I never grew up there. And I'm now living in Saudi Arabia.
Thank you, guys.
So I was reading about Takadao, and it's very interesting. So I didn't fully understand what you guys are doing when I went on the website, but it felt like you were doing like a Takaful, like Islamic insurance based on community, and which the entire concept was mapped over a blockchain technology, and that's how you're giving life insurance. But it would be really really good to like hear more maybe later on or when we meet in person about how you guys are doing underwriting of life insurance, because I've been a life actually all my life, and it's just the underwriting identifying which life risk which is a subpar risk and which is a superior risk and stuff. How do you charge rates to people according to their individual risk and stuff? So very interesting work, but like a lot to learn about it.
Yeah, no, let me do a quick intro since you brought it up and gave me an excuse to talk about ourselves. So as you said, Takada, we built the technology that enables people to mutually insure one another on the blockchain through essentially an like a entity called a DAO, which is a decentralized autonomous organization. Now these DAOs, they're independent entities, they're not owned by us. They actually have their own ownership. The community and the members who are within this DAO who have contributed to the fund, they own the DAO themselves. What we are to them is we are technology service providers. So we built the technology to more or less replace the insurance company, right? So we're saying, insurance, the industry has a lot of contradictions, right? So there's a lot of misunderstanding between the company and its customers because most people expect and they understand that for the insurance company to make money, they kind of have to deny claims or they have to minimize claims because that's where the profit is for them. And so what we did was, look, let's do this differently. Let's take the insurance company out of the picture and let's just have people insure one another. They pool their resources together and mutually insure one another, which is exactly how insurance started way back when. I mean, this was the origin of insurance. So this is what we did. So the service that we're providing here is we made this technology that allows people to do this. And really, there are two things, and you guys are from the industry, so you understand what I'm saying. Number one is the underwriting model. So we actually wrote a pattern for an underwriting model that is kind of parametric, and it's based on it's a self-adjusting model that does the pricing, that does the pricing of the risk, that does then figure out how much claims, etc. And the other thing is a claims management system, which is entirely decentralized. So both of these things are not run by us, the company, but they are actually algorithms, right? So once they're put in smart contracts, nobody manages them. They're managed, they're self-managed. So it's an ongoing self-managed algorithm that does claims management and that does underwriting as well. So the first DAO that will launch using our technology is what we call the Life DAO, which is essentially a Sharia compliance, as you said, Takaful style life insurance fund that is targeted more or less to the Muslims around the world who are today finding it hard to get Sharia compliant insurance. So this is what we do at Takadao. So thank you for giving me an opportunity to talk about
Is this
ourselves. But
okay, sorry to interject. My question was: is it targeting the global audience, and which country, if it is, then which country is regulating the policy portfolio, or is it just completely decentralized, deregulated?
yeah, so we are absolutely targeting the global audience, and we can do this because we are on the blockchain essentially, right? And we have global access and ability to collect payments from day one because it's very much a cryptocurrency. Now, what we've done is we've actually been speaking to regulators from many parts of the world. So we spoke to regulators in Dubai, we spoke to regulators in Singapore, we spoke to regulators, I think we spoke to some lawyers, not regulators in Switzerland. So we decided to, okay, take a Singaporean structure, and we're currently engaging with the monetary authority of Singapore to actually get a sign off, because what we're doing is building technology. And what the DAO is doing a non-profit. So the insurance group itself, the organization, is a non-profit organization. They're not providing a service, they're actually pooling resources together, and it's a membership. So none of this falls under the Insurance Act. So what we're getting with the regulators is, okay, is anything we're doing does anything we're doing require regulations vis-a-vis the Insurance Act? And so the expectation is no, we don't, because we've already had lawyers look into it, etc. And that's what we're doing with the regulators now. The DAO itself will be incorporated as a foundation, so a not-for-profit organization. So that's the regulatory status of the Life DAO.
By the way, I was working on a bit of a similar project a couple of years ago, together with adding to this more like a vitality type of. So it was also related with steps as well, and but at that time nothing was ready to do this. So it's quite interesting.
Yeah, no, thank you for actually asking, and thank you for your interest in this. We love to have more of a conversation about this, as build a relationship between us,
Yeah, we will.
all of us. Absolutely. And today, actually, the topic is very much related to what we're doing and to what you guys are doing. And so you obviously know about CrowdStrike, right? So there was this update by this CrowdStrike, which is a cybersecurity company that works for most of the big companies and big software companies around the world, namely Microsoft. And when they did the update, what happened was they actually caused a lot of services, technology services, to go down. Okay, so banks were down for a little while, airlines were down for a little while. Anything pretty much that was using Microsoft went offline for a while, or somehow stopped working. And as a result, there was huge business interruptions. Okay, so there was an article that was recently published in Reuters, which essentially said the insurers are now freaking out because they said, well, we're expecting to get a bunch of claims in the billions of dollars for this particular outage because a lot of these businesses were affected. So airlines, for example, they're going to have a lot of travel insurance claims. And then like just the banks and the other companies that were relying on this technology are expected to file claims because they lost a lot of business during this period of time. Okay. So the article goes on to state, right away the article is like, okay, first of all, the insurers are going to fight back. They're going to say, well, no, this is either a force measure, so it's not something that is covered by our policies, or this is is not covered by the contract, and so the article is kind of almost guessing whether or not the insurance companies are going to start paying for this outage. The first thing that came to my mind was like, I'm not getting it. I thought insurance, and by the way, I'm from within the industry, so I do understand. So I'm playing the devil's advocate here. I thought insurance was supposed to exactly cover these incidents which are completely like out of the blue, unexpected. Why are they saying, oh no, most likely we don't have to cover it because there's ABCDEFG exclusion? What are your thoughts there?
I haven't seen the insurance policies, but what I presume is that generally the business interruption insurance is been there for the longest time, and generally it mostly covers natural calamities like and the floods and earthquakes. And I'm sure the insurers had put that it would not cover anything uh, otherwise mentioned. So I do feel like since everyone is now, so for example, our startup, which is a very small startup, is using seven global technologies, and if the servers of AWS, let's say, goes down, we will lose all our sales, we will lose all the revenue for that day or even for longer time. Every business is now more and more reliant on the internet. Cyber attacks are prevalent in almost everywhere in the world. I mean, every company that hits a 10 to $15 million mark is flooded by cyber attacks every day. When we were at Baikia, we were cyber attacked twice, and successfully, but we were able to reclaim the data and manage to minimize the risk. But uh, I think companies now, even the traditional companies, not just startups and technology companies, are more and more reliant on cloud services, cloud servers hosting the data. So there is definitely a huge need and an opportunity at the same time to develop insurance against cyber risks.
Mhm.
Yeah, but here,
What I would add is, yeah,
yeah, go ahead.
sorry. So what I wanted to say as well is that business interruptions, of course, have exclusions, like any single coverage of insurance, and any policies have exclusions. And actually, exclusions, for instance, now before pandemics, people maybe didn't think about adding pandemics in the exclusions, but now you can be sure that pandemics are added to the exclusions of a lot of business interruptions, right? So in the same way, when now we have more and more, like this outbreak, for instance, of course, is going to bring insurers to now add outbreaks in the exclusions. And what I wanted to say is that apart from the fact that our insurers are trying to protect themselves, what happens is that you have so many technology companies that have the monopoly. So the concentration of the risk is so high. So when you have an out, for instance, what happened was related to Microsoft. Imagine how many businesses use Microsoft in the world and the impact on the insurance industry. So what I was like, what it wants me want to rethink is like, why are we letting so many big companies having the monopoly? This is what is actually is harming today the insurers. Why are we pointing out the insurers now rather than thinking, why don't we help more, all the different companies that are trying to build great businesses that are actually competing with those big ones, those giants that are became like, untouchable somehow. And that's like a maybe a different conversation. I don't know.
Good point. What I was referring to also interesting. Ishak brought an interesting point here. I think Ishak assumed that this was an attack. Hacking, the business has been hacked. But the reality, after reading a bit more, there is more view on. But the reality, after employees working for the cybersecurity company who made a mistake themselves. So it was not a cyber attack per some of the first finding. So they find out that the the people who are working for this cybersecurity company, which actually is one of the top in the world, had uploaded the wrong file or something like that during a Friday Friday day, and they it was a major mistake. So they were like, how is it possible that a guy could, without having the proper filter and everything within the company itself, validate his system upload, and that's where the some of the assumptions are going to. So there's other people say it might have been like a cyber attack, but most likely it was an internal job done within the cybersecurity company, which will bring a more liability on the cybersecurity company versus claiming it was an act of God or it was a cyber attack and so on and so forth. The cyber attack has been kind of dismissed somehow, and they are waiting for more information regarding
Yeah.
to that. But the reality is that 8 million companies users have been, and they are mostly like major company, have been affected, and the patch has been released right away to stop the bleeding of this mistake. But unfortunately, whatever has been done to the existing company needs to be reboot somehow, and they need the technical knowledge on how to do that. And that's why they are pointing more on the internal mistake versus an attack. So it was not an attack, but that's still terrible. They're like thinking that
Uh, I,
C++ is the wrong programming technology. They need to upgrade to different programming and all these kind of things. And they need to be, for a company that size, they need to have some kind of level of checking before uploading and whatever. So they look like a bunch of startup pulling up code and then uploading the code without being. Anyway, let's see how this thing will work. But the interesting things now is go back to the insurance. Again, people are being stranded, losing money, and so on and so forth. So who's at fault? How are they going to be paid? How fast are the claims going to be paid? All this affect our industry and make us like more upset. I don't care if there's something happening as an end user. What I care is like, what do I get? How do I get protected? How do I get something out of whatever happened? That's where we're feeling frustration around community. It was important to see how we can solve this problem.
So, Murad, do you know about the details of the actual insurance policy? What's the claim, and how are the insurance companies? On what basis are the insurance companies saying that they don't cover the
Well,
liability? And it was covered, right?
actually, there is not yet actually any kind of denial that we are aware of. All that is being suggested is that there's going to be a huge number of claims, right? And they are calling this at least $1 billion catastrophe for the insurance companies. And the idea is that, okay, the insurance companies are going to try to fight this. Now, obviously, because there is a huge risk of them getting wiped out, or at least some of the smaller insurance companies may not be able to survive this if the claims had to be paid out. Now, this we understand because the insurance industry at the end of the day is a for-profit industry. So you can make the argument that, okay, if they pay all the claims, as a way of, let's say, helping and supporting people, which is obviously not what insurance companies do, they will get wiped out. The insurance company will no longer exist. However, people will be helped. So you can make that argument, but at the same time, what that means is that then there will be the future insurance rates will go up really high, right? Because from this experience, nobody's going to want to do this at a lower rate anymore. The insurance companies may no longer exist, right? And so it boils down to a question of, well, what is the reason for insurance companies to exist, right? Is it something that's supposed to be what is known to be people to a lot of people as a public good? So a lot of people imagine insurance to be a public good. They say this all the time. It has a function of helping society as a public good. Or is it meant to be a for-profit business? Because if it's meant to be a for-profit business, then I'm 100% with the insurance companies who say, well, we cannot pay out. Even if we covered it, we cannot pay out because guess what? This is $1 billion crisis. All these companies are going to go down, go under, there'll be no more insurance. But if it's meant to be a public good, then shouldn't it be the case where it doesn't matter if the insurance companies get depleted completely? It doesn't matter if they go out of business. What matters is to help the people. So it does, in my mind, raise questions about, well, why do we exist as an industry?
I get what you're saying and where you're going with this, and I do agree with you to an extent that the insurance companies are like, if there's a straight conflict of interest, right? If there is a big enough claim, they say oh, it can be a good enough claim, it can be a small enough claim so that we keep on increasing our profits every year. But if it's a big enough claim, we will not play and we will try and fight back. So you're basically trying to fight back against the service that you're providing in the first place. So there is a conflict of interest, and that's why the concept of the kaful, I feel, is at least on the paper. If I don't know at scale, that I haven't seen it at scale. It's done successfully, other than in the older times where it was smaller communities. But on paper, at least, it sounds more a win-win situation for the community and for the person or the company who's managing it. They can also make profit, but explicitly pre-mentioned, pre-authorized certain rate of profit, not like if the claims trying to push the claims down as down as possible so that they can make as more profit as possible. So the conflict shouldn't be against each other, right? The company and the people who are claiming. Because if I'm saying, oh, I'm selling something, if I'm selling like chocolates, and every time someone comes and I say, I'm like, my benefit is not to give them chocolate, it just doesn't make sense. What they're offering and what they're really giving out is in conflict with each other. So I get. But this one, like, with cyber security attacks and all of these are equal to apocalyptical catastrophes, like the whole. So now traditionally claims and calamities used to be in physical geography. So it would happen so the flood would happen in the US, in a certain state, in a certain city. And So it will only impact the people. The maximum loss that the insurance company or the industry can take is from that city. Yes, COVID was a global phenomenon. So, and it did force down, and now we're seeing more and more global phenomena rather than physical, geographical phenomena. And for, like Lara rightly pointed out, I mean, like, three companies in the world, they keep 80% of the data. They have the 80% of the server power. I mean, two companies like Slack is doing 50% of the corporate chats around the world. I mean, Gmail is has like 60% of the market. I mean, no one now saves I don't save file on my computer. Everything is on Gmail. If Gmail goes down, I won't be able to share my like stuff or model with my investor. Like,
Anything.
if I don't get to share my
No data room,
yeah, if I don't share
nothing.
my data room for 3 months, my runway goes out, right? So who pays for that? So I don't know if the industry, even like Lloyd's, as the entire syndicate is big enough to take like global level risk for,
Yeah,
like, at least, like, for example, I don't know, just like thinking loud, it would be 1 trillion if like AWS goes down, or there, but they have servers in multiple countries, so it's also kind of a physical phenomena. But something cyber attack happens throughout AWS, or some big thing, then it could
yeah,
like cause like hundreds and billions of dollars.
100%.
So it's I don't know if it's insurable by the industry, but if something new comes up through blockchain, it could be big.
My opinion, by the way, on all this, and I will also talk to you a bit of what I used to do some years ago, because it will maybe bring you a brighter idea of the insurance. Because obviously, when I've been working so many years in the insurance industry, hearing things like, "Oh, insurers, you're all thieves," and it's so annoying to hear that when you actually really believe in what you're doing, right? And in the industry where I was in a very niche business called employee benefits business, but with pooling and reinsurance to captive. So basically, with risk pooling, what we were doing is that we were insuring, let's say, a multinational company in multiple countries, like let's say 25, 30 countries, and reinsuring all that risk. And then we were every year doing the profit and loss account, and of course taking away the broker commissions locally, the claims locally, everything, premium minus everything you need to deduct. And then we were giving back the international profit sharing. So at the end of the day, we were giving back the money to the headquarters of the corporate company, of the corporate, the HQ basically. And so the other product that we were doing was reinsurance to captive, because some corporates are very large and they have their own captive, maybe in the Bermuda or the Cayman or in Guernsey or whatever, and they were actually reinsuring all the risks. So we were reinsuring locally all the risk, and we were reinsuring it back to the captive of the multinational company. So at the end of the day, it means that the local the multinational company, let's say it's whatever a name, WAADA. So we were insuring WAADA. Yes, exactly, because I don't want to give any names and have any issue. So we have WAADA. We're insuring WAADA in Pakistan, India, France, Spain, and what I was paying for this insurance locally to the local insurer. So it was following the local market practice, the local regulations, and everything. And we were reinsuring that risk because we had a treaty with the local company that was mostly a Generali company when Generali was present in the market. And then we were reinsuring it back to the captive. So at the end of the day, when you think about it, it was the multinational company self-insuring. And so that's why it's not in every single concept that insurance is about not trying to pay the claims and so on, because at the end of the day, most of the time, if there was an issue of paying a claim, we were asking back the multinational company, what do you want to do? Do you want us to pay that claim locally? Because and they were actually asking sometimes, consult, like, what would you do as an insurer? Would you pay or not? Because some of them were not that black or white type of situation. So my point is, and if you think also about it, like community, what you're trying, guys, to do, for me makes a lot of sense, because in the sense that it's if it's around some minimal type of claims that you pay back, right? But here we're talking about billions of dollars. So who pays that at the end of the day? And there is always, of course, there is also cat losses insurance that will be triggered in this case, because insurers themselves, they also insure themselves against catastrophic losses. So it's then the reinsurer that's going to take that for them, right? So there is a domino effect. And of course, you need to keep the institution alive, because if every single catastrophe in the world was putting the insurance industry down, it wouldn't be hundreds of years old. And it is hundreds of years old. And at the end of the day, we're talking always about when the insurance doesn't pay claims, but actually a lot of time they pay claims, because I was, I had a portfolio of more than 250 million euros I was managing, and I had a P&L, and I can tell you, I had a lot of claims. So I can see how we can always point out, but it's a bit sometimes, the black, how do we say this? Le vilain canard in French. the Always like the black duck, like that is always pointed out, that is the bad one, and it's very
The
often
black sheep.
exactly the black sheep in French is a duck, and they always end up to get the tough being pointed out and being criticized and so on. So
Yeah.
it's a more complex.
Yeah. So let me ask this question. We know it's very close to being a cat risk, a catastrophic event, right? Because a lot of industries were affected. So they were saying billions of dollars. It may even go beyond billions of dollars. So put yourself in the shoes of the small businesses or even the large businesses that were affected. So let's say airlines and banks and insurance companies, by the way, and think about it. If we were to spread the risk, as in if we were to all, would you be willing to take a little bit less money, okay, from your claim, and therefore make sure everybody get paid if you were in the position where you were claiming?
How would that work?
Yeah, let's say, just generally speaking, the insurance company says, look, on our balance sheet, we don't have $1 billion. We have $500 million. Okay, this is what we can pay out to all of those people. So everybody takes, let's say, 50% of what you would normally be entitled, but that means everybody gets paid. Or would you be like, no, 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 I want to get paid, all of it, to hell with the insurance company, you can close down. As a consumer, would you be willing to kind of like, okay, let's be reasonable, let's work with the insurance company?
I think if the insurance company shuts down, no one gets paid, or some people who are more influential, has more inroads in the insurance company, will get paid, and not us. If I have connections in the insurance company, I'll get paid fully, and if I don't have, I'll settle with 50%.
What about you, Lara?
But it will be unfair. It will be unfair nonetheless.
So basically, you're saying that if we had the option to pay less, but make sure that we're paid back, right? In case of
To get
claims,
less, yeah.
to get less, but for sure being paid back.
Mm-hmm.
Either fight for your full right or settle for less is the question.
It would be fair. It would be a fair way to kind of try to spread, the paid claims and make it like pro rata to everyone. Obviously, some people maybe have been paying for this policy for 10 years and some people have been paying for a year. So it is also normal that maybe you want to give back to the ones that have paid for 10 years more than the ones that have just started their policy yesterday, right? I mean, I don't know. What do you think? Is it right or is it fair or not?
So the way I see it, if I was putting myself in the shoes of a for-profit insurance company, I would be thinking, look, if I pay one claim, I have to pay them all, right? And if I deny the claim and I lose in court, I'm going to have to pay them all anyways, because then everybody will come sue me and I will have to pay them all. That's going to wipe out the fund entirely. So I would be like, let's go to the policyholders, let's negotiate and make everybody try to understand that if you come, if we start paying at full capacity, like the full claim, which is what we're supposed to, we promised, we're going to be completely wiped out. So the first maybe 10% of people will get paid and then the rest 90% will not get paid. So then, like to your point, who gets paid first? And then there's going to be a mad rush and it's going to be craziness. So from an insurance point of view, I'm like, it would make sense if we could just get to a point where we're saying, look, we pay everybody, but everybody has to get less. And it's that or everybody gets nothing, because I, as an insurer, don't want to be wiped out, right? So I will be like, okay, no to everybody, and let's go fight it out in court. This is the kind of situation that pops up in my mind.
I think that when it's a catastrophic like this, when it's a catastrophic situation like this one, so I give you another example of a catastrophic situation: the floods in UAE, right? The floods that we had in Dubai a few months back. Why I feel is different is because we knew that there's going to be heavy rains, right? Some people can have a good behavior and not take their car out, stay at home, know that it's going to rain a lot, and not even when I stayed at home, I didn't even figure that the situation is going to be the way it was. I just thought, oh, rainy day for once, let's stay at home. But a lot of people had a good behavior, stayed at home and so on. And some took anyway the cars and ended it in the water. And you see, there is also the behavior behind of the insured. And yes, it's a catastrophe because it is a
Sorry,
catastrophic
Laura,
event. There's been floods.
I have to
But
say,
what
I
was
have
the
to say
behavior?
something.
Yeah.
Because one of our
Yeah.
team, she lives in Dubai. She didn't take her
Mhm.
car out, but the car was in an underground
Yeah.
parking. It was submerged anyway,
Yeah.
completely destroyed.
That you see is fair. I'm talking about the fact that in this specific case that I'm giving, you can have people that have misbehaved and had an impact, had a claim, right? And you have people that have not misbehaved but still have an impact. And I agree with that. I know those stories. Some people had what was the beautiful part of all this, by the way, of what happened in the floods and the claims and so on, is that, for instance, some companies like MR, for instance, decided that they're going to cover some of the damages and they're going to repair all the damages that happened to MR, to any people that have an MR villa or flat, to repair it at their own cost. Of course, beautiful PR at the same time, because I was seeing that and I was like, I love MR, and it makes you love them even more. But what I mean is, like, there is also, I know the Dubai government has also supported a lot, and in other countries, like if there is a big catastrophe, like government is not here to support. So insurers are on their own. And that's also another thing as well that we have to take into consideration, is that in MENA, we're very lucky we have, governments that are also supporting in case there is a need of
Yeah, I will step in as well. If I understand on your point, Lara, is like I'm an
yeah, please,
insurance now.
please.
I'm gonna be like, oh, why did you went out? Again, we're putting the liability on the end users. You see, in a certain case, why did you go out? And again, people get an insurance because they want to be insured. What I'm thinking is that instead of like maybe kind of finding more like why and finding way to avoid paying claim, you should not have go out when the risk happened. People might not have known. But what is interesting, the insurance industry actually, like everything is evolving. Even now in the banking system, we're talking about how can we, make the banking system uh, friendlier. For the longest time, I used to hate my banker as well. He has my money. I talk to him. I want my money, and I have to beg him to give me my money. And that's what's happening in many countries. You have to go and apologize to ask you money when you want to buy something. So we realize, and now with the new law that's happening in many European countries, for example, where you're starting to be limited on your withdrawal of cash, it's becoming crazy. Now, looking at the insurance landscape and at the end users, we have again, how can we reinvent and re-put the insurance a better image? Why should like you say, few people looking at the insurance say, oh, they're all fifth? This word doesn't come out of the mouth just like that.
Yeah,
It's not like if the industry is getting this bad name, we can do as much PR as we want to make it look better. It's not changing. I had a few discussion a couple of weeks ago with some guys, and they're like, oh, but when you sign your contract, your insurance contract, make sure you pass it on to a friend that is a lawyer. I'm like, wait a minute. So you assume that the global population, the simple people, they have in their network a lawyer. How many people has a friend? Oh, I have a bunch of lawyers friend. And by the way, can you go and read my? So technically, if I don't have a friend, lawyers, I have to pay $500 extra to a lawyer to go over. I'm becoming conservative because after 40 pages, he start saying, "Hey, I read 40 pages here. What else do I have to pin?" I mean, come on. Is that really what the insurance is like? It's not calling like thief. Like, we have to be serious. Listen, the thin print or the asterisk, as a consumer, when you go to buy something or you get a ride from Uber or Karim, and you have this little asterisk. You have to share your live social media channel to 100 people to get a free ride. And the entire contract in the insurance landscape is an asterisk for me. The entire contract is an asterisk. So how do we make it simple? How do we reinvent this industry where I know what I'm getting into, what I'm going to get, the act of God that's going to happen again? Like all the time. I was at the airport in Austin, Texas. My airplane get canceled. It was a beautiful sunny day. But you know what? Act of God. They told me there is some kind of... how do I know? It's true even. So I could not get a replacement cost of flight because they said that it was a hurricane or something happening like 100 kilometers away. And I look on the map, beautiful sunny Texas. But anyway, they disclaim the payment. But how do we becoming more transparent? And then you have the mutual. The mutual. I was shocked. The mutual insurance was like it's supposed to work for the benefit of the member who are part of the mutual, okay, who are contribute to the success of the mutual. If you open your mouth and you're not happy about the mutual kick you out of the mutual group without any recourse. Why is this mafia style? And why, for example, we are afraid of talking about it? When I talk to insurance people, they're always, I'm not going to mention the name. I'm not. Why? I can. Are we so afraid of those names of those guys? Are they that powerful? Are they? You know what it is about this industry? Is it that much of scaring the hell out of everybody's in the industry? That's what we want to know.
Yeah. The worst is that it's a friendly industry, by the way. But go ahead, Isaac.
Yeah, I mean, under normal circumstances, everything is it works fine. But when there's a like a black swan event, even not just the insurance companies, but the government, we saw or run to the bank when everyone runs to the bank. I mean, bank generally holds only 10% of the money, whatever their liquidity ratio requirement is by the regulator, and they're investing or lending the rest of the money. They never have that cash, so you run to the bank, and you will, in a black swan event, the bank will not be able to pay you, and it will most certainly go into liquidation. So even it's like in insurance company, I do actually agree with Shireen and Murad there that the risk pool and the managers of the risk pool should be separate. The managers can should never be have interest in the risk pool, because then they will never work for the interest of the members of the risk pool. But at the same time, I do feel like this is a conversation of like how automation, if you can you work without a human intervention of the risk pool, because so we're talking about the claims right now, the claims in the benefit of the people, but there's also underwriting. I would also like to open the table for a more philosophical question: is can you charge different rates to different members of the society based on their risk profile? Is it unfair or not? And if you say it's unfair, you can't charge a person who's older more in life, very simplistically putting it, than the person who's younger. Then how will the younger person will feel unfair towards? So it's these are all bigger questions. I don't know if there's a right or wrong to it. I mean, even at the prophet peace be upon his time, when the caravans used to go, I don't think they were charging more to a caravan which was taking the passage, which were more riskier or more prone to attacks than the caravans which was going through friendly passages. So this is the question, and the other thing is that the on the other side, I mean, people who are claiming every single claim in general insurance mostly is non-homogeneous. It's every crime is a new crime. So there are obviously people who are trying to break the laws or trying to break the system. So if you automate that through DAO or through any system, I don't know how it will be able to assess each claim risk. There's so much information out there of each claim, and it's basically saying that remove the government or even the democracy, and just allow AI, Gen AI, or based on the blockchain to make its automated rules. I mean, that's good on the paper, but I don't know how practical that is to implement.
Absolutely. So honestly, this is exactly what we're trying to do. From our perspective, we have actually built out this technology with the express intention of cutting the human incentive out of it, and to create a technology that is self-adjusting, that doesn't require active management. And we can probably discuss this, and I can definitely break down how we do claims without a human being. I mean, not without a human being, but without the manager being involved, right? But I think we are really coming to the end of our time here. I know Lara has to go, so I'm just gonna give you guys a couple of minutes. Throw us your last words, and we're gonna wrap this up. Ladies first.
No, I just wanted to say that when Murad was just adding his last thought, I was saying we didn't even start the podcast yet because we didn't talk about how insurers can innovate or how we can innovate to offer better insurance products. So probably this could be part of a second about part two, a second series, and see how we can, in general, I mean, the insurtech industry and insurers can improve thanks to innovation and technology. That's it.
Lara is basically connected to all the global insurers and all the big wigs of the insurance industry. So I feel like, and I'm a rebellious against trying to disrupt them. So we always like, she's always playing safe with her words when she's speaking about. So there is like a pro and con. I mean, one like in an ideal world, it's not a perfect world, right? In an ideal world, yeah, you can have blockchains which will do everything, but let's see if that could be done. I mean, yeah, I have my doubts, but would love to see more of what you guys are doing and try to poke holes and learn from it. But Takaful companies, so Takaful is a good concept, and I think Takaful answers a lot of challenges and questions that we were discussing about, because it separates the manager from the risk pool. Yes, but it always has the human element.
Yeah, for sure. I mean, Takaful, as you know, when you look at even Takaful and what the modern insurance, even when they started in the 15th centuries in Europe and stuff like that, they were looking actually at the Takaful concept, the shipping company. They were protecting one another based on what they learned from the Ottoman Empire or some of the when they met with different business practice during the Silk Road era, Al-Waqf concept, endowment concept, Takaful concept. And that's how mutual was created as well. Uh, uh, yeah, and as I like what Lara say and what of course Isaac say, what is interesting is we're living in a very interesting time today where, the vision and the understanding of owning your own data, decentralization, having your own data center in each single country to protect, safety, security, and stuff like that. That's where we're coming to, where countries are more like trying to protect and try to diversify the risk with the central authorities. We mentioned AWS, Google, and everything. What is interesting is that with the rise of decentralization, Web3, blockchain, and everything, we see a big movement where the population is moving to ownership. Could be ownership of your own data, of your privacy, and also your own wealth, your money, and the insurance. So we see a rise of interesting block of technology who can definitely uplift every type of industry. And of course, the insurance industry is always in the middle of that. And decentralization, blockchain technology, smart contract can make all contract cheap, accessible, and so on and so forth. So very interesting that we're sharing our thought and see how this technology and of course innovation will help make our life easier in many many ways, and starting with the financial aspect of it.
So of course I get the last word. For me, it's all about incentives, and I believe that the insurance industry currently has a problem of incentives, right? And this is it's a systemic thing. It's not the individuals. Individuals are all have the right intention, but they are essentially trapped in this very poorly designed system, I want to say, as far as incentives goes. And to follow up on what Murad said, it's the Web3 blockchain, it represents a paradigm shift. It's a different way of looking at the world of technology. And what particularly is important in the Web3 is ownership, right? It's the ability to own whatever it is you're doing, whether it's your data, it's your financial service, it's the money that you are trading in. Because at the end of the day, Bitcoin is actually owned by the community and not by any one individual power, as with some of the other more decentralized cryptocurrencies. And so insurance has to move back into that paradigm where ownership should be under the control of the people who are being insured. And that is what we're trying to do at Takadao. And that is what I believe is the future of insurance. Yes, Lara.
Yeah, I just
Lara
wanted
wants
to
to have a
add.
last word.
No, I'm sorry, just because it reminded me. But anyway, I really need to go. I remember you told me the conversation is going to be heated, so we don't know if we're going to be able to end early. But what I just wanted to say as well, what is very interesting is that younger generations, they're used to this. They like owning their data, but they also think that their data. They understand that their data has value. And what I find also interesting is that, while insurers, for instance, they ask for data in order to improve your risk, I think also over time, what's happening is when you incentivize the insured for giving more data in order to improve the underwriting, then there is going to be a shift, I think, because of the younger generations having a different mindset about what it means to share your data, and that your data has value, and what can it give back to you. And I think there is something to work around that as well. But anyway,
I 100%
I
agree
think it
that
is time for us to.
the youth is where things need to pivot towards, and that's what we're trying to do with the blockchain and Web3. Thank you guys very much. This was a fascinating conversation.
That's great.
Until
Thank
next
you.
time, thank you for coming on the show.
Okay.
Perfect.
Take care.
Take care,
Bye bye. Thank you
guys.
very
Thank
much.
you
You
so
bye.
much. Bye bye.
See